Hey guys, Mike here. So I'll tell you, there are some interesting things going on in the market right now, don't you think? And if you're not aware of what I'm talking about, I'm fixing to show you that. We'll hit the charts, a lot of data, just jam-packed. And also we're going to talk about why people were somewhat worried about China reopening and how that has a tie-in to inflation, by the way. And I tell you, man, I showed you one of these yesterday, but here's what's going on, man. You got another one today. Another company has already said they're probably going to go bankrupt. Now look at this right here, Party City. Put this down in the Discord. This stock right here, when I put it in the Discord, is up 90%. Now we're sitting here up 115% on Party City. It's up another 20% in after hours. And when you look at what's going on over the last few weeks, what do you have going on? You have these stocks right here saying they're going to go bankrupt, basically. And so they're skyrocketing. Meme stocks, altcoins are up massive over the last 2 weeks, by the way. Anything that's highly shorted, going up, because I got alerts today on stocks I hadn't even thought about in over a year, and these stocks have literally been pummeled. They're down like between 90 99%. They're probably trading anywhere from 50 cents to $2, and they're all up double digits today, right? And so I was like, I'm like, wow, who's buying these? But obviously somebody is, right? And so I swear we've seen this before, maybe twice this year, or twice in 2022, that is. And let me know what you think in the comments, what's happening there, because it's definitely high risk. And you'll see what I'm talking about too when you're talking about high risk, high beta. When you look at what was up today as we go through here, because the indexes weren't up too big or too massive, they kind of just traded sideways. But you got your biotech, you got your BNGOs, that kind of stuff's going up. Your travel stocks, which kind of surprised me because that's definitely not high beta, but that's going up. Your precious metals are going up. Then you're sitting there with your ARK stocks going up pretty big today, and they've been going up the last few days. This week's been a good week for them. And so that's another thing to look at, because that's the high beta stocks. And then here's more high beta. Look at anything to do with crypto. Coin, nothing's changed fundamentally. They didn't lay more people off or going to. And so that's always positive for them, but that's going through the roof right now. You end up sitting here with stocks that have just been beat down and hammered down. They're going up today. And then, of course, your Chinese stocks continue to go up, especially BABA. Continues to go. Don't know what's going to happen to the EV stocks. I mean, I can't imagine. Buffett just sold a whole bunch of BYD, but he owns so much of it. But he did sell over 1 million shares, I believe it was, out of that. And then, of course, you got your fintechs, which have been hammered. They're going up. Funny thing about semiconductors, the dollar was actually green, yields are green, and yet all the semiconductors were green. And then you come down. Tesla needed a down day because it had already reached its weekly option move yesterday. And so I expected it to be red. I'm not surprised by that one a little bit. It didn't go down that much, though. And then you can just see with the big boys, I mean, they're somewhat green. The VIX is broken. It's down again. No volatility, I guess, whatsoever for the SPY there. Nobody's buying that. And then, of course, you see your indexes. I think they end up going up after I record this by another 0.2%. And then if you just look down, you think, okay, well, man, I bet you the QQQ divided by SPY and the QQQ divided by the Dow is way up. Not really. You see right there, I mean, it's basically almost flat. So not really. People are a little more risk on, but not as much as you would think. And some stuff we're going to go over with the index real quick, looking at the charts. You got to be open-minded. You got to be data-driven. Don't matter what you think. As far as, if that's why I say, don't adopt a bearish or a bullish mentality. Just say, okay, what's the data saying right now? What's the chart saying? However you want to look at it. And when you look at IWM, small caps, I told you it trades in this range, and those moving average will start to flatten out moving up. And it's about to do a golden cross from its 50 to its 200, right? We already did the death cross and sent its way down. But you can see when you get a golden cross, because especially with a stock that usually likes to consolidate like this, you can get big moves, but you can also get this right here. This is what I'm saying. If the bear market maintains, just because this trades sideways a lot, you can get that where it's just up and down, just crossing. But again, when you do come out of a bear market, small caps tend to do pretty well, and they get that golden cross, it tends to go up. So you got to be open-minded on that. What do you see happening on the Qs, right? You see the 50 is about to cross up to the 100. It's still way down from the 200. This is the most beaten down index. But if you look at it, what else do you see? You see that line has been holding for quite a while now. So October, November, December, now we're into January, and this will all depend on earnings and everything else that's coming up here. But you see consolidation. This is really, it's just trading sideways, right, in that chop box. And that has held. That line right there around 262 has held up multiple times. Now, if it does drop below that, it's going to become earnings suck or something happen with CPI. That's what's going to drive it down, and then try to test those lows. You look on the S&P right there. 50s crossing the 100s, heading up to the 200. We're heading up to the golden pocket. And so when you look at that right there, again, if I scroll it out a little bit more, you'll be able to see it. we've been in this chop box, right? This consolidation coming across, right? And then we scroll back all the way. You can see, I mean, this looks at 2022 as we've been selling down. Now all of a sudden you're seeing the curve start to happen, right? So this is where you start to see more 50 moving stocks above their 50-day moving averages. The reason why I put it in the morning brief every morning, NASDAQ especially, because it usually bottoms first. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And I made a video for the members a few weeks ago about that, about the NASDAQ 100. And I put the indicators you can look at and compare it to other ones and say, you know what? You can make the argument, right? That was the bottom right here. When this bottomed right here, and now we're starting to move up, even though the Qs are definitely down this cycle from where it normally would be compared to the S&P, because what's happening, the Dow, other stocks, defensive stocks are leading the way. And so that's really the two camps, right? I mean, defensive stocks, that's really going to lead us out of this thing and not being prepared for a recession, right? So that's the thing we're looking at. All of that depends on earnings, which is coming up for fourth quarter, right? Going to start Friday with financials. Of course, also CPI, which is the Thursday, which before the earnings, right? And I'm going to go on that in just a second if you want to see how big firms are playing that and what they're telling their clients. I'm fixing to show you that as well. But the other thing is, do we avoid a recession, right? That's really the big thing, because today, like the World Economics, somebody came out and they were just talking about, you know, the whole globe. We think about all the liquidity that's been taken out and stuff, and with inflation and everything else, that they're pretty much saying it's like a worldwide recession, right? And they were talking about America and how low the GDP should be and the growth and all this, and it wasn't good. They put out no good news, let's just say that, right? But the market didn't care, right? We're in this, you can see this, we're in this meme stock, altcoin, Chinese stocks, anything high beta is getting bought right now, okay? And we've gone through the high beta stuff before a couple of times. We're going to see how this plays out. But the other thing to think about is, wait a minute, you're telling me tech's and lagging is not going to lead us out of this, but what's people buying right now? A whole lot of tech right now. And so at least today and yesterday and this week. So, you know, that could be a sign that, I mean, they're just kind of trying to make some money right there, because retail ain't got enough money to be pushing all those stocks up. There's no way that's possible. But getting into, you know, some data here to look at, and this is going to lead us into earnings. And what's weird, and this one surprised me, this is the company offer guidance index. And if you look at the beginning of the same time last year in 2022, it wasn't good. And now look where we're at. It's up. Like the company guidance, they actually feel like it's better than it was. And so that's actually really surprising to me. And then when you look at liquidity, right, these are U.S. financial conditions. And I've said this before, they're not tightening. It's not as tight as it once was, right? It was actually tightening. So of course the market was going down. But since you've seen the market rebound, the financial constraints hadn't actually been as much. They've been actually loosening more than actually increasing. You can see right there. And there's another chart I've showed the members this, where it's like you expect it to be increasing, but then again, what's happening? They slowed down the balance sheet roll off. And so at the end of the year there, and see, you know, the yields are all been coming down. And so financial conditions have been loosening. And of course, like, what do you see happening with rates? They've been coming down for, you know, cars and homes and everything else. And this should be pretty self-explanatory. Don't really too much worry about the columns. I'll go over those in just a second. But this is what big money is expecting, hedge funds, when it comes to earnings for companies, right, as a whole. And when you look at it, you can see at the bottom we got fourth quarter, obviously first quarter 2023, and then second quarter 2023. Well, what are they expecting? They're expecting all these columns, which is EPS and sales current and EPS current, to go down, right? That's what they're expecting to happen. And then to bounce back in the second half of the year. And that's why they were calling it, you know, it's earnings apocalypse and margin compression, and everything's going to compress and the stock's going to go down and test the new low or the old lows and all that good stuff. And this is the big question, right? This is what's supposed to send us to the new lows, right? And test it and break it and whatever's going to happen. This earnings apocalypse. And guess what? The bar is already pretty dang low. And you've seen some companies report here, you know, smaller companies where some of them even had, like, they missed both top and bottom line. The stocks barely moved. And so, you know, you see people reporting margin compression, everything else. Doesn't really matter. It's coming in better than expected. So they're like, okay, this ain't too bad, right? But it's earnings. This is the last leg. Like, if earnings, you know, if we keep spending and we keep running those credit cards up, boom, boom, boom. Remember, everybody's expecting a recession. This is the most anticipated recession ever. And because everybody's expecting it, people say it can't happen. Of course, always, you know, I saw somebody today who said, well, you know what? We all know the sun's going to rise tomorrow, and somehow it keeps rising. So I don't know, but it's just one of those things where everybody expects it. Is it going to happen? I don't know. And that depends on us, right? If we just keep spending. Costco, I mean, their stock's up for a reason because we spent during the holidays at Costco, whatever we're buying there. And so, we're going to see more reports rolling out. But that's the big thing, all about earnings. So this is it seems like every earnings season during 2022 is the most important. This is more important to see if there's actually going to be a turn, because you see those charts just staying in these chop boxes, right? Not going down, staying in the chop box now, just like this, for a reason, to see if that happens or not. And there's a couple reasons that happens, right? Big money loading up in their positions they want to be in, first of all. And so when we get the earnings, they can send us where they want to send us. And if earnings stay good, there's no reason to send us down to the bottom. There just isn't. Unfortunately, that's the way it is. And so in a lot of stocks right now, that's why I would say you got to look for the ones that have based out for a long time. They've hit their lows. Unless we hit some crazy recession, they may go back into that low, but they're pretty much done. Like, that's where they're going to be. Okay. And so, and you saw that again, all the Chinese stocks, which are up massive now, right? They had their bottoms where they just based out forever, right there in those chop boxes for a long time. And so you're seeing American stocks do the same thing. And so, if you want to see how big money is handling CPI, is a JP Morgan. They put this out there to their clients and stuff. And if we look at it, I don't know if this is the same company I used last time or not, but what they're saying is December CPI right here, below 6.4%, which is a 20% probability, they say. And they say the market's going to be up 3 to 5%. Big move, right? Or sorry, 3 to 3.5%, excuse me. 6.4 to 6.6, so we're still below expectations, but I think expectation is 6.6, if I'm not mistaken. 65% chance. So there's an 85% chance it's going to be 6.6 or below. The market will go up 1.5 to 2%, and then if we're above, only a 15% chance they're giving that, 2.5 to 3% move down. And one thing I do want to touch on real quick here is China reopening. This was kind of the concern. How would it affect future inflation, right? Because when they open up, obviously they let everybody out of their houses. Demand, a lot of demand flows in for a lot of stuff, right? And they're trying to prop up their housing sector again. So what are you seeing going up? Copper has been up, lumber, sugar, heating oil, live cattle, crude oil, which makes sense because there should be a lot of demand if people are allowed out of their houses. And so that's what they're worried about. And plus, they prop up that housing industry over there and start building ghost cities again, everything else. Then, yeah, there's going to be a lot of demand for lumber and copper and everything else. And if those start to go back up in price, which have come down because demand had slowed, what does that do for future inflation? And I can guarantee the Fed, they are studying the 70s, until they're blue in the face. But we had 3 waves in the 70s. Why do we have 3 waves? That's the question. And are we going to end up having another wave if they open up and prices continue to rise in all these different areas? That's the question, right? And there's going to come a point in time, this is what I can't wait to see, is how the market handles this. There's going to come a point in time to where, we get these big, 0.5% drops like every month, that we just get stuck between a certain number, whether it's 4 to 5, 5 to 6, whatever it is, that sticky inflation, the rents and all that stuff, which tend not to come down very fast. That's what I want to see. Well, how does the market handle that if we get stuck? And I think that's why the Fed, if they stick to their guns, and they actually should, because until you get, whether people like it or not, the Fed's funds rate above the inflation number, you can't bring down inflation as much as you want. It's just the way it works. It's the way it's always worked in the history books. That's the way it's probably going to work this time too. So we'll see. I think that's why they want to try to get it like 5.1, between 5.1 and 5.3, because that'll put it above core at some point in time, whether it's this month, next month, or the month after. But the question is, how soon, if these prices continue to go up for copper and all the rest of them, does that start to cycle into the inflation data? And so that's something we're going to have to keep an eye on as well. So again, look for your based out stocks. Look and see if those are on your list. Look and see if they're crossing on the weekly, the 30 moving average, 40 moving average, 200, whatever you want to use on the weekly there to figure that out. That's what you need to do. Let me know down in the comments what stocks you're looking at and stuff, and what you think the leaders are going to be. All right. And so tomorrow we have KB Homes reporting, but again, the economic data we're looking for is going to be on Thursday, and then earnings on Friday. That's the 2 big days. So I expect, obviously, we just did a back test on the SPY today when it broke out and it moved up. We'll have to see. Again, it's not at its weekly options range or nothing, but we'll see how the rest of them do, and we'll see if we keep seeing risk on happening here. That's really the big thing to watch out for as well. So anyway, hope you got something out of it, guys. I know that was a whole lot of data and stuff, so I found it, so I just wanted to show it to you. So hope you guys have a good night, and I will see you tomorrow.